Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is September 17, 2016. It's a Saturday morning, and we are talking about the weekly market review. But before we do so, let me direct your attention to the bottom of our webpage. Let's go there real quick. And if we look at this disclaimer right here, the biggest part we want to talk about right here is this section right here where it talks about our products and services are provided solely for educational purposes. Written and verbal statements, including those provided on our websites by staff members, testimonial individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. We are not licensed financial advisors. The government does want us to let you know that. Therefore, please, before you make any trading decision, make sure you consult the advice of licensed financial advisors. We are just simply people who look at charts and tell you basically what our opinions are of the charts. All right, that being said, let's take it to the markets for now. So this is a chart of the SPX on a daily basis. Looking up here on a daily basis. All right, want to zoom in just a little bit more so we can see what's really going on and taking place over here. And what we see here, let me do this. What we see here is a market that was really choppy last week. Okay, we had a big drop last week Friday, not Friday yesterday, but the week before, the Friday before yesterday, and then we had a big rally back up and then a drop down and then an indecision day where there was nothing really, then a big day up and then another day down. Okay, so it's just literally been seesaw, up down, up down, up down, up down. So what do we make of that? All right, so whenever we see stuff like this happening, which is not uncommon, basically what we're dealing with is a market that is consolidating, trying to decide where it wants to go. Okay, we had a big drop that we had last week Friday, rallied back up, gave us some kind of bullish sign, but it was one of those things where it's like, let's just wait and see what happens. So what I want to do today is do some things that I haven't done, that I don't typically do, just to kind of like give a better picture of what's happening right around here, and that is to go into a smaller time frame. To do that, I'll do that later on, but we'll do that just to kind of give us an idea of like, okay, while this consolidation is taking place, can it give us any clues as to what we can see is about to take place? Again, remember, right side trading is always about anticipating what's going to happen into the future and not necessarily what's happened in the past. Okay, because we can't make money based on what already took place already. We make money based on if we can accurately predict what the market is going to do. Okay, and I hate to use the word predict because it's not necessarily predicting, but anticipating is the better word. What we expect the market to do. Okay, so but before we do that, let me just say that there are some key levels that you have to watch out for, and some key levels that we are watching out for. And the first one has already been broken, which is this level right here. Okay, we were watching for this level right here. We wanted this level, wanted to see how the market did, and stay above this level. Okay, and the fact that at the end of yesterday, which is Friday, the market was below that, that's not a good sign. Okay, so again, just like I had mentioned 2 weeks ago, where we were seeing some bearish signals on a weekly chart. Let me go to a weekly chart real quick. When we're looking at this right here, when we said, hey, this is showing us some bearish signal right here. Let me highlight this section that I'm talking about. I'm talking about these four candles right here was showing us that there was a bearish signal taking place. And to be careful about that, we saw that, eventually the market went down. The issue now is we did not want to see this market stay below this level right here. Okay, and it did. It did that last week, and then now this week it's staying below it again. So for that reason, on a weekly basis, this is not a good sign. Okay, this is not a good sign. All right, because this level has been broken. All right, so the fact that that has happened, that's not a good thing. Okay, now the only thing we said about this was that typically what you'll see is that the market, even though it's going below this level, it would have taken some time, not a one-day big drop like that. So that one-day big drop was a big, something that really threw everything off. And now we just kind of like have to recalibrate and see what happened. But at the end of the day, we said, this is not a good sign if it stays below here, and it has done that, and so that's not a good sign. So we have to see it for what it is. That's not a good sign that the market stay below here, okay? And ever since then, it was only last week Monday it actually closed above that, but then ever since then it could not. It stayed below it, tried to peek its head above this level, came right back down, and then now it's showing that it's back down over here again. So that is not a good sign, okay? Because if this was supposed to be support in the past, now that it's broken, this is now acting as resistance. That's not a good sign, okay? So this could be a resistance on a daily basis that is showing us that this market is ready to go down, okay? The other thing that we have to look at is the fact that we have a bearish Harami signal, okay? This is a bearish Harami signal. So depending on what happens come Monday will determine whether or not we are going lower or not. So when I look at this, it's like there's a case. There's definitely a strong case for this market to go lower. Definitely a strong case for this market to go lower, okay? Now, that's the argument for this market going lower, all right? So what are we doing? Are we taking any bearish position? No, we're not taking any bearish positions right now. To be honest, we're just sitting on the sidelines because just as much as we see some very strong indications that this market will go lower, we have some very strong indication that this market will also go higher. So for that reason, we have to wait and see which direction the market is really trying to go. All right. So for that reason, we're not bullish. We're not bearish. We literally are sitting on the sidelines this week, waiting to see what happens. Okay. So what are some of the things that is making us sit on the sidelines saying that these things are happening? Well, one thing that is neutral right now that we have no idea as to like what would happen is the Feds. Okay. So if you go over here, you can see here, this is forexfactory.com. And basically just gives you a calendar of all the reports and announcements that are supposed to come out during the week. Well, if you look over here on Wednesday, okay, Wednesday, right there. On Wednesday, let's see here. We have Wednesday right here. So we can see that on Wednesday, we have the FOMC economic projections, we have the FOMC statement, we have the federal funds rate, and the FOMC press conference, all taking place between 2 o'clock and 2:30. And what we have seen in the past is that whenever we have that, what would happen is that the market would kind of like just, you'll have like doji days like you see right here, where market is really not going up Monday or Tuesday, and then Wednesday comes, and then, if the market favors what the FOMC, which is the Feds, if the market favors what the Fed says, the market will go up. If the market does not favor what the Fed says, the market will go down, okay? So it's kind of interesting that we have both bullish and bearish sentiments, and that is showing us that, the market could go either way at this point in time, okay? So again, I've analyzed the bearish side of it, which shows that it could go down based on this fact that, we broke through this support zone that has now become resistance, and now we have a bearish Harami signal, which could show that this market could go, further down. All right. Now, that's that side. Now, for the bullish side is the fact that if we go back to the weekly chart, okay, the big breakout section that we were looking at on the weekly chart, oops, wrong one, was when the market, let me do one thing right here. Let's go back to a vertical cross so I can see my lines. The thing was we were looking at when the market broke out above this level right here. Okay, so we were looking at this close right here. All right, let's readjust that and put this exactly on the line right there. Okay, so we're looking at saying that this close right here, if the market should break above that, all right, that this market should be going higher. And when it did that over here, that was our clue that the market was trying to go higher. And one of the things I said was that, it's not unexpected. Let me take this line off. It's not unexpected for it to come back and bounce back down to this bottom line right here before it starts going back up again. Okay, so now I'm making a case for the bull side. I've already made a case for the bearish side. Now let me make a case for the bullish side. All right. Now the market has come down and touched this level. Now this level is like, more important than this level right here. We did not want to see this level taken out, but it did. So that was not a good sign. And then we're showing, again, bearish signs that it's going down. But now looking at the bullish side is that it came down here and it could not go lower than this. Even when it went lower during the week, by the end of the week, it closed above this line again. So this line right here is more important than this line up here, okay? So for the bulls, we don't want to see the market go below this level and stay below this level. Okay, so far the bulls are still holding their ground in the sense that they are not letting this level go down. So that's the one thing. The second thing is this reversal signal right here, which is an inverted hammer signal. Okay, so to see an inverted hammer signal on a support level, which is this line right here, all right, why is this line support? Well, the reason why that line is support is because before this line was resistance, and once it broke through that, it changed into support. So when we look at this right here, we're seeing a inverted hammer signal on a weekly basis, which is a big time frame, all right, that is showing that, hey, this market is holding at this support level. So that's the good thing about the bulls, okay? So that's your case for the bulls. Now, if we go to a monthly chart, okay, we can see that this same line really, this right here, I'm going to draw this line right here, okay? This line right here, let me change this color to, let's make it orange, okay? Actually, you know what? Let's make it magenta. They don't really have magenta. Let's just use that one. Okay. So this purple line right here, okay, is the ultimate, support level right here. A close below here is absolute disaster. Okay. So as we go into this week coming up with the Feds about to say whatever they have to say, we have to see where they're, and this is on a monthly basis. So at the end of the month, if we close below this level right here, that's a big no-no, a big no-no. So really we have 2 more weeks to see whether or not the market closed below here. Until then, to be honest, we are not looking at this market as, oh, we're going to go bearish into this market just yet until we see it close by the end of September. If at the end of September, September 30th, October 1st, we see the market down below here, especially September 30th, the last day of September, I believe, let me see, let's see, the last day of September, which is September 30th, I'm not sure what date that is exactly. Oh, that's a Friday, so perfect. So September 30th is a Friday, all right? So September 30th is a Friday. So if on Friday, September 30th, we are below this purple line right here, that would be a big, big no-no, okay? Very big no-no. All right, so that's the case for the bulls. Now, here's what I want to do, something I don't typically do, all right? And the reason why I'm trying to do this is because we have this cluster of candlesticks, okay? If you look over here, these 3, if we just look at these 3 candlesticks right here, let's see here. If we look at these 3 candlesticks right here, this is a bullish reversal signal called the morning star, okay? Now we have a stock, we have the next day that, was kind of bearish on that day, but, it's still okay because it never really went below, this bullish signal right here. So yes, it's bearish on that day, but if it went below here, below this level right here, that would be our issue right there. But it didn't do that. So for now, we are still okay. Okay, we have a bullish signal that is telling us this market could go higher. All right. Now, that being said, let's do this. What I want to do is I want to go to a 30-minute chart. I very rarely ever do that. Okay. But I want to go to this 30-minute chart and show you just a little bit more clarity what's taking place with all this cluster of candles, okay? And trying to see where is this market showing us that it's trying to go, okay? So if we look at this from Monday, so this is Friday, this is the big drop from Friday, okay? So last week Friday to this week, so we have exactly 1 week's worth of, worth of data, okay? The first thing that I want to highlight is the fact that we have this triple bottom that we see down here, okay? And this is on the 30-minute chart, okay? We have this triple bottom that we have down here, all right? Right there. Okay, so something like that, all right? So we can see the market went up, came down, went up, came down, okay? So the question now is, it started rallying back up, it pulled back down, and if you look over here, we have what we have right here, which is this double bottom right there, okay? We have this double bottom right here. So the market hasn't made its way back down to this level right here. So this is what we have to then look out for. Let me do this again. Let's remove this drawing. Let's duplicate this and bring this up here. And what I'm doing is I'm capturing, this level's right here so you guys can see that. Let's extend this to the right and extend this to the right. Okay. So what we're looking at is somewhat of, a triple bottom. We could probably come over here and maybe put like a line up here and say, okay, here are the tops right here. Okay. Let's see right there. All right. So either the market is going to go up to this level or come back down over here. All right. So that's what we have to look for is this market going to come down here or is it going to go up there? All right. One indicator that we can look at real quickly is the MACD. Okay. And what we see here is that while this market was on the 30-minute doing a double bottom, triple bottom, what we see is, improvement in the MACD indicator going higher and higher and higher. Okay. That's what we see right here. We see an improvement in that. Okay. So that kind of gives you a clue as to where the market is trying to go. All right. The fact that the market is going higher and higher and higher. Okay. And so we have to look at that and see that, on a smaller time frame, it seems like there's more improvement to the upside rather than to the downside. Okay. We can look at this as well on the 15-minute chart. You can see the same thing. We have improvements in the MACD. Okay, we have improvements in the MACD. Okay, if we go to the hourly chart, again, we can see when the MACD was making double bottoms, triple bottoms, we can see, let me remove this, we can see improvements in the MACD. Okay, so that is one thing that is making me look at this and say, if we have improvements in the lower time frame showing that this market is trying to go higher, it's possible that we might see a market on a daily and weekly basis actually go higher. Okay, so if that's the case, then that means that this Morningstar signal would probably have the chance to go actually higher because of the fact that we have a smaller time frame that is showing that there are improvements in the price action. Okay, the indicator showing improvements in the price action. All right. So that's one way that we can look at that. However, be aware that we have both cases. We have both cases in the sense that we talk about the bears and some information that's telling us that this market could go down, but we also have information that's telling us that this market can go up. I truly believe that if we wait till Wednesday, not Monday, not Tuesday, but Wednesday, if we wait till Wednesday and see what happens, okay, I mean, the market could probably start dropping as early as Monday or could start rallying as early as Monday. But the thing is, there's so much that we have to wait for. We need some very important data, and that is the information that the Feds are going to come out with on Wednesday to kind of get us an idea of where this market is going to go. So personally, we don't plan on trading until Wednesday evening, Thursday morning. Okay, so see how the market reacts to what the Fed says. Wednesday, we'll reevaluate everything at that point in time. And then based on what happens Thursday morning, so the open of the market will kind of give us a very good idea as to whether this market is trying to go up or down. Until then, we just sit on the sidelines, manage our trades accordingly. And again, just like we always say, remember to trade on the right side with confidence.